I did some analysis from our previous company. We had calls with 370 unique investors, and it turned out that 80% of all the calls I had were just clearly not the right fit. The line between success and failure in venture rounds is really a thin line. You could be struggling to raise a round one day, and then 2 weeks later, it's like a massively oversubscribed round. We looked at our call records, and out of every 100 pre seed founders we speak with, about 80 of them are miscategorizing themselves as seed founders. Before the end of 2026, Metal is getting to a place where our platform is going to unearth and uncover things that with any amount of research you do on your own, you will not be able to uncover no matter what you do.
Welcome to Tech Finance. I'm your host, Sasha Orloff, repeat founder and current CEO of Puzzle, and self-professed finance nerd. On this show, we dive into the pulse of B2B fintech, from newly funded startups transforming the office of the CFO to major industry shifts, deals, and partnerships that are reshaping how we think about finance. You'll hear the most important developments, essential analysis, and of course, AI innovations. This show is brought to you by Puzzle and the Turpentine Podcast Network. Let's dive in.
All right, everybody, welcome to Tech Finance by Turpentine, part of the Andreessen Horowitz Podcast Network. This show's for founders and finance teams, where we talk to the people behind the future of accounting and finance. And this is going to be a cool one. As you know, I'm Sasha, founder and CEO of Puzzle, and I'm thrilled to be joined by Gul today, who's a serial founder and working on super intelligence for fundraising and helping founders reverse engineer the fundraising process. So we are in for a treat. All right, let's get started. Gul, welcome to the show.
Sasha, thanks for having me. Gul here from Metal. We're building an AI-driven operating system for fundraising. We're backed by Combinator and Andreessen Horowitz and a lot of other great investors, and excited to be here on the show.
All right, cool. Let's dive in. So take us back to the moment when you first kind of realized this pain in fundraising, and that was the thing that you wanted to solve.
Yeah, I think the genesis for Meta really goes back to 2019. We raised a 12 million Series A financing led by first round capital in oversubscribed round. But that's after the raise, right? During the raise, it was tough, right? And specifically, we were building a consumer transportation company in emerging markets, right? Burn is going through the roof. And every investor we speak with is on the edge, right? They're like, hey, like this burn is like just taking off in a big way. You're doubling your burn, every month. And, you're saying it's going to increase further. This just thought seemed like, a very investable business, right? And, we had like about 25, 30 calls and, we weren't making headway. And that's when we, sort of took a step back and sat down and we're like, okay, what are people who have made money in consumer transportation? Those are the people that really understand consumer transportation. And we looked at Uber and their seed stage investors, and one of them was first round. And no surprise, when we engaged with first round, they had a prepared mind for this sort of a company. And within, 13 days of the first call with them, we had a term sheet, and it turned out to be a massively oversubscribed round. And so one interesting sort of insight there, such as which I'm sure resonates with your own experience, is like the line between success and failure in venture rounds. It's really a thin line. You could be struggling to raise a round one day, and then 2 weeks later, it's like a massively oversubscribed round. It's like all over the news, right? And I think the bigger sort of takeaway from me from that experience was like, the whole world is sort of families across the globe are just like sort of running highly imprecise fundraising processes, right? Like they don't have the empirical precision or insight to really understand what are the investors that have been investing in the same direction in which I'm building.
Yeah, so it sort of comes down to this. The advice once you go through it, you learn so much more. And I think you're working at Mastercard, Marqeta, DoorDash, and then you go through the founding story. Fundraising isn't something where like you have a lot of practice. Like you can't go to the batting cages for fundraising a little bit, but maybe now you can. Maybe tell us a little bit more about like what Metal actually does.
Yeah, absolutely. So what we've done is we've taken every fundraising workflow, right, and we have uh, found ways to bring deep intelligence to that workflow using industry data, right? So like when you're a user, you sign up on our platform, we ask you a bunch of questions about your growth, who's on your cap table, who have you raised from, what's your stage, what's your sector, what's your product do, who are your customers, And then using that, we build a context window on you and your company and your profile. And then as you make your way through the product experience, you give us your pitch deck, you give us more information, we get smarter about your company. And then on one side, we're getting smarter about your company and you as a founder. On the other side, we've got all this rich data from, more than 500,000 venture rounds that have happened over the past like 10, 15, 20 years. And so we use those two things to sort of bring deep intelligence into every fundraising workflow. So what are the workflows? Number one, investor discovery. Like, what are the most likely investors for your specific company? And, just like the, Series A example from my previous company, 2019, like the most likely investors for your company are investors who have been investing in a similar direction, who've actually, been backing similar business models. They're not necessarily direct competitors, and they have more of a prepared mind for your business, right? And so we, do a lot of focus on that, on how we surface that. And then, we're not trying to guess, and we're not trying to, sort of just give you like, hey, these are the top 20 investors, right? Like we've actually built an operating system where you can like look at different investors. You can form your own opinions, and we're just sort of surfacing the information you need to form your opinions on what type of investors you want to go after, right? And then the second workflow is like relationship intelligence, right? So if you're talking to a given investor, you want to know who that's raised capital from them that can tell you about what they're like to work together with, right? And what does their process look like? What does the risk appetite look like? Who on the partnership does X, Y, Z, right? And so to get a color of that, you really need to know who within my network has, worked with this investor before. And, like I know Puzzle, like I think we've known each other for a very long time, but I don't know what are the 27 or 40 or 15 masters that are backing Puzzle. And I certainly don't know that for, like the hundreds of founders that are in my network. And so what Metal does is it integrates with your, data connections and just shows you very specifically who are the people and then who have those people either invested in or have raised capital from using transactions data.
So what you mentioned a little bit before, there's part of it which makes sense to me is the sourcing part, right? Like if you don't have a deep network of investors, part of it is like just who is out there that could possibly be interested. And just because somebody's an investor, back to your point, and they invested in company X doesn't mean they have any interest or motivation to invest in your company, whether it's consumer or B2B or AI or hardware or AI ever like, who knows? There's a retail, there's like endless amounts of people. Just because you're an investor doesn't mean that you're necessarily an investor. That kind of makes sense to me. But tell me a little bit more about like what are some of the other parts? Because like you said, just like servicing a list of investors is like probably not super like valuable. Just me sending a cold email to an investor that has absolutely no interest in investing in, say, accounting software at this stage, for is like, so it's just what are some of the other sort of workflows? And then maybe you could bring it to life a little bit with some sort of common mistakes you see founders making along that path.
Yeah, yeah. So, I mean, I think in order to sort of really win at fundraising, we got this question a lot. So we published what we call the Metal Manifesto. It's 5 things that I think you have to really nail, right? Aside from building an investable business, right? And so, I'll talk about that in just a moment. But in terms of workflows, right? So investor discovery is the first workflow. I think it's the most important one. It's important because you could with the same company, you could talk to one cohort of investors and, it's not going anywhere. With a different cohort of investors, you've got multiple term sheets, right? And so nothing changed. You're the same person. It's the same founder. It's the same company. It's the same metrics. It's the same story, right? And so what changed was the cohort of investors. So I think this is like massively important. And I think the second thing, work we talked about is like relationship intelligence, just like being able to know who in my network has worked with this investor or who in my network is invested in companies that have, raised from a given investor. I think that really matters because the industry runs on warm introductions. Um, and then, the third workflow, we talk a lot about is actually running the process. And, in a fundraising process, what are the nodes of progress? What are the nodes, that are really progressing your thinking forward and or, sort of, are the points of distinction between the past and the future? Those notes of progress are really investor meetings. And so we give you some really sharp insights into, how that meeting went, what could have gone better in that meeting, in terms of the structure you bring, in terms of the clarity of the call, in terms of the conviction, in terms of, how to read the call, And we're beginning to now do some machine learning stuff around it, which I think is going to become very, very powerful. And we can actually, with a large enough data set, we can predict if this call is going to lead to a second call or not. And if not, then why not, right? And so we're getting there. We're not there today, but that's the future. And then also just like general advice, right? So like historically, Sasha, I think the way founders have gotten smarter about fundraising is through WhatsApp conversations and email threads with people they know and trust and saying like, hey, do you think like 20 million is like too high of a valuation? What if I drop it to 15? Is that going to come across the wrong way? And so with, our in-app agent, for the first time, founders can actually get intelligent, reliable, data-driven responses that's not guesswork, right? I just spoke with a founder yesterday and they're like, you know what? I spoke with someone, they're a very accomplished founder, and they said you should be raising a pre-seed of 15 million post money. And, like that could be great advice in general, maybe for a second time founder that's building, a certain type of a company. But like the median valuation for a post money at pre-seed is 3.5 million in B2B software in the US, right? And so I asked the founder, hey, why don't you ask that question to our agent? And she did. And the agent came back saying, these are the median. This is the 75th percentile. She's like, oh, wait a second. So 15 billion would be 95th percentile. I don't think I want to go for, 95th. And so I think there's a lot of like value in fairness, just like all these questions you have, not just about evaluations, not just about what investors to target, but like how to run the process, how to read investor intentions, how to read a specific note by a given investor, right? Like founders need help because most of them are doing this for the first time or the second time or the third time ever in their life. And they don't have as much of a prepared mind on this. And I think having an agent that can like sort of distill things into clarity using empirical evidence is something that we see founders getting a lot of value from. And then finally, the last workflow I just touch upon is this idea of like value added services for fundraising, right? Like there's a whole world out there of like all these like design shops that will make your pitch deck look a bit better, feel a bit better, flow a bit better. But like what do founders really need? What they need in a fundraising process is someone who can really map out key narratives in a very empirically inspired manner, right? So for example, whenever you go into fundraising, one of the common questions that comes is like, what is the competitive landscape and, all of that, right? And like, whenever I get that question, like, I know exactly what that looks like and I explain that and I articulate that. But, I don't have the time to like really build that into a deck and really show how what we're doing fits it into a broader industry narrative. And, there's maybe like a couple of days of work, maybe it's a week of work, right? And, you know, uh, VCs don't have the time to do that work. They often don't for whatever reason. And so, we're bringing, a lot of like emphasis on value added services and we're coming out with the right model for founders to do that in a very cost efficient manner, whether we partner with third party providers so those are sort of all those things combined are, sort of key, sort of key parts or key components of what we refer to as the AI operating system for fundraising.
Hey, we'll get back to the conversation in a moment after a word from our sponsors. All right. One of my favorite tools that I use and we use is Notion. Notion is used by thousands of startups around the world as their connected workspace for everything from engineering specs to new hire onboarding to fundraising. Notion has a special offer for listeners. 6 months of free Notion with unlimited AI, value of over $6,000. So you can access the limitless power of AI right inside of Notion to build and scale your company and team with one tool. Get 6 months free of Notion with unlimited AI, along with custom templates when you apply for notion.com/startups/puzzle. Once again, that's notion.com/startups/puzzle. Go for it. I think you all remember that sound. It's the dial-up. Why would startups still be using accounting software from the 1990s? It's like running your company on dial-up internet. It's like raising a Series A on a fax machine or pitching investors with a flip phone. You wouldn't build the next unicorn with outdated tech, so why are you still running your numbers on it? Puzzle is leading a new movement, an AI-first ledger that eliminates the grunt work, updates in real time, and actually helps you make informed decisions. No more waiting, no more guessing, just the clarity you need it when speed matters. This isn't just accounting, it's the future of how businesses run. Join the movement today at puzzle.io.
There's yeah, I've raised I think 13 rounds in my life, which is like not a bragging thing. That's like a if I wish I didn't have to do that and I could just retire by now and just spend more time with the kids. So I'm not saying this in the sense of like, oh my God, I've like raised 13 rounds. Like what great. It's like that's a failure. Like if I could only raise one round and then retire, that would have been the better way to. But I've met at least two other people in my time, and there is, I'm reinforcing your point, there's truly an art to the storytelling narrative for fundraising. And one, just to give a shout out, is Jared Bloom, who's the co-founder of Fourth and King and was the first round pitch assist deck designer. And I think he worked in PR before. It's like incredible. And that's in the earliest stages of that, like kind of first rounds of capital. And then at the growth stage is Steve McLaughlin and FT Partners. Like these people are just incredible at understanding the sort of psyche of investors and translating your story. I see so many founders taking their like customer sales narrative and like using that to repurpose for a fundraising pitch. And you're like, the difference of what you're selling to somebody is their immediate problem right now. That's what you sell to your customers and investors thinking, is this person going to build one of the a fund return type of company? And these like big, it's a very different mindset. So anyway, it's exciting. When you sort of think about that part of the process storytelling, do you think that's something that AI can do or will do or is doing with Metal? Or do you think that's something where just it's going to take it'll either take a while, like people are gonna have to share a bunch of pitch decks of like what worked and what didn't work, and or like there's always just gonna be some human component to that.
Yeah, so I do think AI is already playing like a really big part in that. I think one area in which AI has just been transformational in that is, founders are now running their stories through LLMs and are realizing what's going to resonate and what's not going to resonate. So that part is already happening. It's happening through ChatGPT, and some platforms will specialize in that and maybe do it better. But I think, the part that will, in the foreseeable future, at least for the next few years, I don't see AI replacing is like really telling a powerful empirical narrative of how your vision fits into a broader industry structure. I think that takes enormous creativity, that takes enormous research, that takes enormous independent thinking. And, I think like it will always be a mix of like humans and AI. Now, what should be happening today that's not happening. And look, like, please tell me if there's people out there that are doing this because we want to send them a lot of customers and we want to partner with them and we want to bring them into our product and stuff like that. But what's not happening today is like, you really should have a very simple, low cost solution where, I can be like, hey, like, this is what I'm building. These are the different sort of, this is the competitive landscape. This is what we're doing differently and give me an empirical narrative of like 10, 15, 20 slides that just maps out this industry in a really thoughtful, intelligent, data driven, empirical manner, and that talks about like the different players and like bucket them together in different categories and like and then there's like two paragraphs and of input from me, maybe three paragraphs, and it turns out like a 20 deck slide that an investor can look at and be like, I know exactly what they're doing that's different from the industry and what their unique sort of value proposition is and why they're winning. Because like a lot of the platforms, like I'm sure like if I look at Puzzle's website and I don't know a lot about accounting and I look at like some other platforms, right? Like it will like, oh, this seems like a crowded space. And every space looks like a crowded space when you look at it from a 10,000 feet view. But it's only when you like really zoom in that you see the nuances and the differences in topography and you realize why some players are winning and some are not. And so, to bring that to life, I think there should be a low cost, easy solution where input is like those three paragraphs and maybe like 5, 10 grand. And then output is like in 3 days, like, I can get like a really high quality deck that's like easy. And, I don't have to spend like MSAs and master services agreement and like, 2 weeks of like, relationship building. It's just like very transactional, that's the input and this sort of the output.
Yeah. Yeah. Oh, I get this. And oh man, our website is in overdue for some work too. But even just in our experience fundraising, and people were like, "Well, what's the difference between Puzzle and all these new funded companies like Relate and Campfire?" And I was like, "Oh, those guys are great too. There's a whole slew of ones. We literally never sell against each other. In fact, we refer clients to each other around because the word accounting is a big huge industry, right? And like they sell to CFOs and internal finance teams for, professional grade accounting like a NetSuite. And we serve against QuickBooks, which is like to accounting firms of small, medium businesses. Founders is a totally different market. But that's like one of the first questions we get. Or like, how are you different than Fondo? And I was like, oh my, they're like one of our best partners. We love them. We've been working with them forever. And they're like, oh, really? I'm like, yeah. Yeah, okay. It's like, "Oh my god, that's right." I'm so deep in my industry. I think we have challenges as founders. We're so deep in the weeds and the nuances of our own industry that it's hard sometimes to come out and take that view. How does metal help with that? How does metal help with that?
Yeah, so we're coming out with a huge announcement on value added services on January 1st. And so I won't cross the line in terms of disclosures that my team has set for me. But we are attacking that specific problem in a very direct manner, in an AI enabled manner. And I think the right solution is like it's a mix of like AI and human in the loop sort of a solution. But specifically that, right? Like we're attacking that very specific problem and are coming out with a solution for that on January 1st. Should I go into the metal manifesto? It's
Yeah, do it. Fire away. Let's go. I pulled it up and I was gonna go into it if you didn't, so better coming from you.
there's like sort of five big things, right? These are call it the five cardinal sins of fundraising, right? And they apply to every stage, right? Series A, Series B, seed, pre-seed. You don't have a product. First one is, when you're not being insanely detail oriented in terms of like what investors you want to go after and why, right? If you're like, oh yeah, I'll just like, these are the investors I've seen, these are the lists that
Oh,
come up.
first, hold on. First, maybe just go through the 5, name the 5, and then let's start going through them one at a time, just so, we can sort of frame everybody listening, that's not on the website can kind of, like, think through them, and then let's go through them in detail.
Yeah. Five sort of cardinal sins of fundraising, right? Like number one, not being insanely detail oriented in terms of what are the right investors or what are the most likely investors. Number two, not building sort of a replicable process to sort of land investor meetings, whether that's through your network, whether that's through your investor network, or whether that's through your founder network. Number three, like not paying attention to leading indicators of a successful raise, right? There's specific indicators that can help you identify how this fundraising is going. And then number four, not running a high velocity process, just being insanely high velocity in certain parts of the process, and therefore letting that become a prolonged sort of race. And then fifth is just not telling the right story in terms of your communications. And um, so I'll talk a little bit about each of them. Not focusing on right investors, this is the biggest one, right? You want to be insanely detail oriented and insanely opinionated in terms of what are the most likely investors for your specific company, right? Sometimes, for one founder, what he did was he was building an AI for recruitment space, and he's like, look, all the investors in this space are jaded. They made investments and they didn't go anywhere because they chose the wrong companies. And so, you know what? I'm going to talk to investors who have not made an investment in this category. So you know, that founder built a list of like, 200 AI for recruitment companies in metal. And, he excluded all the investors in any of those companies and then went after the investors who had not placed a bet in that category, right? And that was his opinion, right? But like, I think not having a very specific opinion on what are the most likely investors and not being empirically driven to sort of identify those investors, I think is the first one. Second one is just like, replicable process to land investor meetings, right? Like a typical fundraise, you could be anywhere from 20 meetings to like 60 meetings, right? But like you need a replicable process to sort of unlock access, whether that's to your founder network or your investor in your cap table or, however you choose to do that. And then the third one is actually leading indicators for a successful raise, right? So there's actually two specific indicators, KPIs, that will tell you if this fundraiser is going to be successful or not, right? The first one is opt-in conversion. So if you send an intro request and the person forwards that to an investor, right? What percent of investors opt in, right? And if that number is, it should be somewhere between 25 to 50%. If that's like less than 20%, like there's something going on, investors, you're either not talking to the right investor, you're not focusing on the right investors, there's something in your blurb or in your deck or something in that direction, which is just like needs attention, right? And the second one is like first call to second call conversion, right? If less than 10% of your first calls are converting into second calls, right? If that conversion looks like 5% or less than 10%, I think it's a problem, and it requires a diagnosis on why that is. And then it's running a high velocity process. This goes back to really like, the YC advice, right? Of like, don't get hung up on one conversation or a few set of conversations. You just like manufacture your own luck by the sheer velocity at which you move. I think this is true in business, in general in business, but particularly for fundraising. And then finally, not telling the right story, right? And like you mentioned, right, like the story you tell your customers is very different. The story you tell people who are joining your team is very different. The story that investors need to hear, is particularly venture capital firms that are looking for like sort of companies that can get really big really fast. I think it's a very different story. And just like that sort of commitment to quality, right? Like if your deck is not in the top 5% of all decks you've seen, like, that I think that's, there's something, there's some work to be done on that, right? So I think not putting in enough time and effort into telling the right stories. Those are the five big things that I think, are can be the cardinal sins or can be the five things, big things you really have to get right in order for a fundraiser to work.
Yeah. Speaking of that, I'm going to turn the tables over to you a little bit. You raised quite a bit of money in your first company, and now you're starting the company to help other people raise money. What are some of the surprises or mistakes that you made starting Metal to come in, or any hypothesis on like, all right, I'm going to start Metal, and here's the problem we're going to solve, and then you get into the weeds, and you're like, oh my god, this is a bigger opportunity. This is a better opportunity.
We really started off with investor targeting, right? With my previous company, right? I raised 120 million in venture financing across six different venture rounds. And in every round, it was such an imprecise process, right? Like I'm hitting people up on WhatsApp and saying, hey, who do you think would be a good investor for me? They're like, oh, well, I'm, an LP in this fund, or, I know people in this fund. And like, why don't you talk to them, right? And I'm adding names to my, spreadsheet. And it's just like a highly imprecise process. And, it's not due to a lack of sophistication on part of founders, right? I think a lot of founders are very data driven. And, I think it's because of not having the right tooling to do that sort of thing, right? So we started off with that, right? And the key insight there was I did some analysis from our previous company. We had calls with 370 unique investors over 3.5 years. And we look at like how many of those investors were actually, a good fit for our company at the time that we spoke with them. And it turned out that that number was 75. So like 80% of all the calls I had with all the investors from our previous company they were just clearly not the right fit for, given where the company was at and given where we were at, right? And so that was a big insight we started from, how do we get better investor targeting? What features do founders need? What tools do founders need? What insights do they need, right? And then came relationship intelligence because that was the next logical problem. And then came the, pipeline and like running the right process, investor intelligence and meeting intelligence and, feedback for founders on and where we want to take the platform from here on, such as like it's all around predictive intelligence. Like before the end of 2026, Metal is getting to a place where our platform is going to unearth and uncover things that with any amount of research you do on your own, you will not be able to uncover no matter what you do. Right. And that's actually, I think, how we plan to become the industry standard platform for founders across the globe, whether you're in Australia, whether you're in the UK, whether you're in the US, whether you're building accounting software, whether you're building a robotics company. Metal is going to start unearthing insights. It's just not possible for you to uncover. You can try deep research on ChatGPT. You can do, months of research on your own. You'll just never be able to find those critically relevant insights that Metal will bring to you. And so that's the big mandate for us as a company in 2026.
it reminds me of the quote, the Wanamaker, I don't know how to say, the Wanamaker dilemma of like, half the money I spend on advertising is wasted. The trouble is I just don't know which half. And so we think about where metal can come into play. Do you think it can address it? Like, make to your comment, you like, you took X number, 100 and X number of meetings, half of which didn't work. Do you think the problem is, uh, the solution end up with being having less wasted meetings, along the way? Or is that just, you think, always gonna be part of the nature of the changing fundraising environment?
Yeah, I do think, I do think uh, there's, I do think this problem will get solved, in a big way. And I think we're just starting to see sort of the first steps to where, getting the problem to be solved, right? I'll share a small example, right, of where the industry is right now. So financing software as a category, it doesn't exist, right? Like, we're pioneering a new category. And what's the empirical evidence for this? When I say it doesn't exist, right? Well, there's all these like financing CRMs that have existed for the past 10 years, right? And so, maybe the category does exist. Well, the reason we know it doesn't exist is because you ask like 100 random founders, like, hey, what do you use for fundraising? Out of that 100, 98 will say, "Oh, we use a spreadsheet, a Google Sheet, an Airtable, or something of that nature," right? Which means whatever tools there might be, no one uses them, right? And if and no one's using them, it's probably because they're not great tools, right? And so this is sort of complete greenfield, opportunity, and that's sort of how we look at like the fundraising software as a category. We're pioneering a new category, and in this category, just given where the industry is right now, we ran some numbers. We looked at our call records, and out of every 100 pre-seed founders we speak with, about 80 of them are, miscategorizing themselves as seed founders, right? So seed stage, generally speaking, investors expect like you're doing 100K, 200K, 300K, maybe more in analyzed revenue, right? And pre-seed is like when you're not doing that, right? Like maybe you have no revenue or you have minimal revenue to finance like maybe less than $10,000 a month, right? And these are two distinct categories. These are two distinct types of investors. They're playing very different games. Um, and they have very different strategies and very different risk appetites, right? And so about more than 80% of all pre-seed founders miscategorize themselves as seed stage companies. So that's where the industry is right now, right? Like this idea of like, data driven and empirical fundraising, it's a very new concept. Uh, to your question, I think the situation is changing, right? It's changing because there's like more awareness. There's like platforms like ChatGPT. Even if you're not using any world class fundraising software, even just ask the ChatGPT, it helps with targeting. It helps sort of point you in the right direction. It won't give you precise precision and in sort of comprehensive solutions, but I think the industry as at large is moving in that direction. So that's one, right? Where I think, where things still have a long way to go is just like sort of how founders are educating themselves on like what is the different venture rounds? Are these just names or are there specific expectations attached to each and every round? And the expectations are different, right? For a fintech company raising Series A, very different. A robotics company raising Series A, healthcare company raising Series A, those are all very different benchmarks.
Yeah. What do on that part? So we get to the point where, targeting the right investor is helpful, and that just doesn't mean industry. There's also stage. It's knowing what stage you're in, what stage the company's in, what are the expectations, of that. That makes a lot of sense. Um, One of the things that I'm seeing, just having been an investor or a founder for 15 years now, a little bit more, um, is just the market changes so quickly. You've been building metal for nearly 2 years now. The market has changed so dramatically. It feels like, from reading headlines on the outside. What's your view just of the general fundraising market since you started metal to today?
Yeah, I mean, it's a great question. I think it's definitely becoming way more competitive. I think the benchmarks and the investor expectations are much higher today than they were maybe 2 years ago or 4 years ago. Um, and even if you take out like the ZERP era, if you take out 2021, right? If you go back to 2020 or 2019, I think investor expectations today are much higher for every round compared to what it was in 2019, right? Um, and so that's one direction in which I think things are changing. I think the second direction in which things are changing, and we're just beginning to see that with metal, right? Like we launched publicly on October 1st. Things that work, products that work, they're growing a lot faster than traditionally such products have grown, right? And I think a big part of that is because of this new era of go to market, LLMs, better flow of information, better discovery, you know, um, social, right? Like just I think information is flowing faster, and people are learning about things that work really well a lot faster. And so we've seen that at Metal, right? For example, like 2 months ago, I would not have guessed that we would sort of be getting the sort of new customers every month that we're getting. And a lot of it is driven by things that we don't fully understand right now. Like we don't know who these people are. We don't know how they're finding out about metal. And so, I think a lot of that growth is like, it's faster and steeper for companies that are working, that have products that are working. Um, and I think that has something to do with, sort of investors expecting more at pretty much every round. And then obviously, with the platforms like Replit and Lovable and, Cursor, prototype, you can spin up a prototype in an hour. You don't need, a couple of weeks to do that. And so I think that certainly has made, sort of uh, starting a startup a lot easier than it was maybe a few years ago.
Just like throwing a little humble brag in there. Oh, we have so many customers coming to us. We have no idea where they're coming from. They're just loving metal and telling their friends about it. I guess that's the sign we all strive for as founders is finding something that you have more customers and you know how to track and attribute. That's a great thing. Tell us about just let's talk a little tactically about metal. Like you started it. Tell us about your fundraising journey and where you got to date.
Yeah. So with my previous company, I raised 120 million, made a lot of mistakes, learned a lot of big nests. And, one of the big mistakes we made was, we overcapitalized the company, right? And we raised more. And so with Metal, we are being very, very intentional and particular about how and when we raise capital. So we raised a very small pre-seed round, never announced it. And that was to sort of figure out what we want to build. And, we YC, led the rounders, small pre-seed. And we just wrapped up. We were just sort of on the closing edges of a very small seed round, and we actually take pride in how little capital we have raised. And the reason we take pride in that, I think when I was wrapping up my first company, I raised 120 million. The company was ultimately unsuccessful. Some of the same investors that backed my previous company are now backing Metal, so that's been great to see that continuity. But I came across a news article where there's this other you know delivery company they were building very similar, something very similar, and they raised $7 million and they sold the company for 350 million, right? And I was like, wow, like this is what great looks like. And look at how little capital they've raised and look at how far they've traveled with that. And so that was sort of an inspiration for me in starting Metal. And so with Metal, we have big plans in the future, but we are actually very excited and proud of having traveled a very long distance with minimal capital. So we've raised yeah, we haven't disclosed our sort of total funding publicly yet. So.
Got it. Well, you have to come back on when you announce it because I think it is exciting and it's I think a new playbook in how you're building, which is I feel like much more common these days. There's sort of this air of like I got to go right big right away and sort of use funding as a customer acquisition strategy. Um, has I think burned enough founders and people now that overcapitalization prior to product market fit is actually more dangerous than it can be helpful. Not all the cases, but in a lot of cases. Um, one of the I think one of the points you talked about, which is exciting, is that companies can become much bigger, much faster now than ever before. So, what's your advice to those that are kind of tinkering around in what might be need some investment, but might not be the next open AI? And what's your advice for the people that are part of these high flying, like, oh my god, the world is busting at the seams because I don't have it. Like, the difference between some of maybe the Lovables, which is public, and I don't want to name anything else, but like sort of companies that should maybe how do you advise the difference between sort of like a metal and a lovable? Two sort of different types of businesses, both great, both incredibly valuable, but slightly different, potential um, escape velocities because of the world of AI. I say that in the most genuine, like in it, not in a bad way, but I don't know how to frame it.
I love that, but there's like three levels of nuances there, right? The first one is, I was talking to like this top tier VC, everyone knows, one says the name because, and it's not that, but it's like top five, top three, and they're like, well, look, we looked at Lovable and for their Series A, and we said we're not going to invest. And it was a very easy decision for us. And the reason we said no was because the product didn't work. It worked, but it didn't really work, right? And looking back at that and how that product has grown, and the traction, and like the big lesson for us was like you cannot evaluate AI products based on where they are today. You have to look at like where this product is going, and you have to sort of align yourselves with the future state, and you have to sort of take that leap of faith, and then look at like how is this thing going to grow, and how is this thing going to. So I think the really big question mark, for metal, when I think about metal, is like where is this product going in a year from today, right? And how inevitable can this product be to every single founder's workflow, right? And I think that's a big question, right? And it remains to be seen how well we execute. And it's easy to talk about things like predictive intelligence. It's really, really hard to pull that out, right? And that's why we're public, because we're not concerned that someone else is. It's just like takes an insane sort of execution, thoughtfulness to sort of pull that off. Um, and we haven't done that yet, right? We've been working on the product for a good 2.5 years, right? And so I think that's one big sort of question mark on metal. But I do think there are some products, right, that just completely reimagine an experience to the point where it becomes like so powerful that these products just sort of new user acquisition just takes a life of its own. It's just like you can see that, and it's but it's hard for you to sort of explain why that's happening. And I think this would be solved with like Replit and Lovable and other similar platforms. I think there's like products that, are headed in that direction, but they haven't sort of hit that inflection point yet, right? And I think, until you are fully confident, right, that you will hit that inflection point, you see it, you are 200% positive. Like, I think raising a massive, like round, like a 30 million round on like a 500 million post money valuation is going to lock you into something that, sort of may or may not happen. And so it might be, like you're putting, sort of horse before the cart. And that was one big lesson from my previous company. So you just got to be sure of a lot of things before you raise, a big round at a 500 million post money valuation. Um, and so, yeah, I think that's the big thing. And I think only the founder, like you as a founder are in the best sort of position. Uh, you know, uh, how clearly can I see that, right? And then, I think it's not obvious to anyone else. But if it is obvious to you that this is just going to be like, a multi-billion-dollar company, then absolutely go raise that round at like the highest valuation, go raise a ton of capital, invest in that, take the market, right? But if that's not 100% clear yet, right? Maybe this is like an exciting $300 million business. Maybe this is a $500 million business, but not a multi-billion-dollar business. And so, until that becomes clear, maybe not raising a lot of capital is prudent and wise. So,
I have a lot of friends who, raised venture capital, had every ambition, sold the company, and are living very, very happy lives at a 100 million exit, a 200 million exit, a 300 million exit. And, we're so much hyped up on some of the tech crunch stuff of like, there's only one way, and it's to build a FANG company or nothing. And well, I think that's probably most of our ambition at some point. You could have a very happy exit for you, your employees, your shareholders, but by keeping lean and building something super valuable. All right, I know we're getting close to the end of time, and you got to run. One piece of advice that you say out to founders everywhere, what would it be? Aside from use metal, of course, which we'll talk about in a sec.
right. I'd go with like, I think there's like a lot of really obvious ideas in the world that are missing. I think, that's the feedback we've gotten on Metal as well, right? Like a lot of founders use it and they're like, well, what I don't understand is like, how does this not already exist? Like this is not something novel or something extraordinary, right? I think accounting is similar, right? Like you look at something like Puzzle and you're like, wait, like how does something like this not already exist? Why would anyone sort of do this stuff manually and make a ton of mistakes and spend way more like it's just, so I think just work you have a choice on what you work on, and the more you think about that choice at the earlier stages, I think people generally spend not enough time thinking about what they should be working on, and I think that's very very true in today's time and age when so many different things can be completely reimagined, and a lot of them are very very obvious.
And for founders listening that maybe have never raised venture capital before and they're thinking about it, what's your top 1 to 2 pieces of advice for people going into their very first time?
Whatever LLM you use, Perplexity, ChatGPT, use like, something purpose specific like Meta, whatever you use, uh, start with like asking like 100 questions, right? Just like I think the venture capital is becoming more competitive, it's becoming more focused, it's becoming more targeted, and it's less of a cottage industry that it used to be. And so the more, well versed you are in sort of all the different dynamics and the nuances of like what is a pre-seed round, what's a seed round, and what are investor expectations of this round, and like, what are industry best practices for doing X, Y, Z. I think the more time you spend on that, the better equipped you will be for your fundraise. This goes back to something I read in Andy Grove's High Output Management, one of the management classics. It's like the more time you spend on the front end of a process, the faster you're gonna get to the end outcome of that process, right? And so, with fundraising, instead of like falling down and getting back up and then learning it that way, if you just like spend more time on the front end, just exploring your curiosity, I think your fundraise will go faster, smoother, and you'll get to the end outcome a lot faster and with having to fall fewer times.
Yeah, and there's no excuse not to anymore because Metal is already giving a bunch of free content out there to help you get familiar with the process. And I think you even have a freemium plan for people to just kind of get started and get to play with it right away. Is that right?
That's exactly.
And then where can people find you or Metal?
Yeah, so Metal is our website, www.metal.so. And then I am super responsive on email. I'm gul at metal.so, GUL at metal.so.
All right, founders out there, you have no more excuses. Go to Metal, check it out, have a successful raise, and go build something amazing. All right, cool. Thanks for coming on the show, and congrats on everything. And keep it up.
Thank you so much. Thanks for having me, Sasha. This is great. Thank you.
Thanks for listening to Tech Finance with Puzzle and Turpentine. If you got value from this episode, please share it with anybody building or funding the future of technology. And please leave us a review wherever you're listening and tell me about what you want to hear more of. If you're looking for accounting software you'll actually love to power your company, check out puzzle.io, the modern accounting platform for the AI era. Tech Finance is part of Turpentine, the awesome podcast network behind Econ 102 with Noah Smith, Turpentine VC, Complex Systems with Patrick McKenzie, and so many more.